Oil has long been the backbone of Saudi Arabia's economy and the driving force behind its development. As the world's largest oil exporter, it's challenging to envision a Saudi Arabia without oil. However, the country is now on a bold mission to reduce its dependence on oil revenue as the bedrock of its national economy. This push for economic diversification comes in the wake of a decade marked by oil market volatility, which has intensified the economic and political challenges faced by the ruling Al Saud family. Saudi Arabia possesses approximately 17% of the world's proven petroleum reserves, making it one of the leading net exporters of petroleum and home to the world's second-largest proven oil reserves. Saudi Aramco, one of the world's largest integrated energy and chemical companies, operates across three segments: upstream, midstream, and downstream. In 2022, Aramco's average hydrocarbon production was 13.6 million barrels per day, with crude oil accounting for 11.5 million barrels per day. The company proudly claims to produce the lowest carbon barrel of oil in the industry and has committed to achieving net zero emissions by 2050, ahead of the government's 2060 target. Saudi Arabia continues to invest in cleaner conventional engines, carbon capture, utilization and storage, CCUS, hydrogen, and renewable energy sources. Despite these efforts, Saudi Arabia remains heavily reliant on oil, which contributes 42% to the country's GDP, 90% of export earnings, and 87% of budget revenue. On March 3, 1938, an American-owned oil well in Dammam, Saudi Arabia, tapped into what would become the world's largest petroleum reserve. This discovery profoundly transformed Saudi Arabia, the Middle East, and the global landscape, politically, economically, and geographically. Before the discovery, the majority of Saudi Arabians were nomadic, and the nation's economy largely depended on the tourism industry, driven by religious pilgrimages to Mecca. The company responsible for the discovery, which later became Chevron, set the stage for a seismic shift in the country's future. In the wake of the discovery, Saudi engineers developed an extensive infrastructure of ports, refineries, pipelines, and oil wells. Today, oil accounts for 92% of Saudi Arabia's budget, making the nation one of the world's leading producers and exporters of petroleum. This wealth from oil has fostered high-level diplomatic relationships with the West, as well as with China, Japan, and Southeast Asia. Some argue that Saudi Arabia's oil wealth allows it to wield significant influence over international foreign policy decisions, particularly those involving the Middle East. The kingdom's demographics have also been reshaped by the oil industry, attracting millions of foreign workers from the Middle East, South Asia, Southeast Asia, and other regions of the world. The first oil discovery site near Dhahran is now connected to a vast pipeline network that transports petroleum across the region.
Petrodollar is actually a device invented by Kissinger and Nixon.
Are desirous of and are seriously looking forward to improve the relations that bind them to the United States of America in ties of friendship and respect.
Petrodollars refer to the revenues generated from oil exports, denominated in US dollars, and are not a separate currency, but rather US dollars accepted by oil exporting countries in exchange for their oil. In 2020, the global average for daily crude oil exports was around 88.4 million barrels, with an average price of $100 per barrel. This would translate into an annual global supply of petrodollars exceeding $3.2 trillion. For many members of the Organization of Petroleum Exporting Countries, OPEC, and non-OPEC oil and gas exporters like Russia, Qatar, and Norway, petrodollars are a primary source of income and wealth. The term petrodollar reflects the common practice of these nations accepting US dollars for crude oil transactions, rather than a global trading system or a distinct currency. The US dollar is favored by oil exporters because of its global value in international investments, making it a practical store of value for oil revenues that need to generate returns. A significant example of petrodollar recycling is the 1974 agreement between the United States and Saudi Arabia, where Saudi petrodollars were invested in US treasuries. The profits from these investments were later used to finance American arms sales to Saudi Arabia, as well as various development and assistance programs in the country. Today, Many oil-exporting nations channel their petrodollars through sovereign wealth funds, investing in stocks, bonds, and other financial products. For example, one such fund holds nearly 1.5% of all publicly traded shares worldwide, with 72% of its investments in equities. The petrodollar system has been crucial in facilitating smoother international trade by standardizing oil pricing, simplifying transactions, and reducing exchange rate risks for oil-importing nations. This system underpinned the strategic alliance between the United States, Saudi Arabia, and other oil-producing countries, a partnership that has significantly influenced global politics for decades. For oil-exporting nations, petrodollars have provided essential income, enabling reinvestment in infrastructure, drilling, and exploration projects, which in turn boosts oil production and drives technological advancements in the energy sector. The petrodollar system has reinforced the US dollar's status as the world's primary reserve currency, driving global demand for it. Oil-exporting countries typically hold large reserves of US dollars, which they often invest in US government securities, thereby strengthening the US economy. This high demand for US dollars, fueled by oil trade, helps maintain a favorable US trade balance and ensures ample liquidity, making the dollar the most traded currency in the forex market. However, the future of the petrodollar system is increasingly uncertain due to shifting geopolitical dynamics. On June 9, 2024, Saudi Arabia ended its 50-year petrodollar agreement with the United States, an event widely regarded as the end of the petrodollar. This agreement had been the cornerstone of the petrodollar system, and its termination marks a significant shift in the global economic landscape. With the end of this agreement, oil transactions may now be conducted in various currencies, including the yuan, euro, yen, and possibly even virtual currencies like Bitcoin. These developments reflect a growing desire among nations to diversify economic risks and reduce their reliance on the US dollar. By diminishing the dollar's dominance, these changes could lead to a more multipolar monetary system, granting countries greater financial independence and potentially creating a more balanced global economic environment. The rise of new economic alliances and the global shift towards sustainable energy alternatives further challenge the traditional oil US dollar system. The transition to renewable energy could reduce global reliance on oil, thereby diminishing the significance of the US dollar and prompting a re-evaluation of the current system. As global energy and financial systems evolve, the role of the petrodollar is increasingly being questioned. The recent end of the US-Saudi agreement is a clear example of the shifting geopolitical and economic landscape. These changes may result in market volatility and the revaluation of various currencies, presenting both challenges and opportunities for the global economy.
It is a big vision, and we get surprised every day that we reach our target faster, and we extend that to a newer target and a bigger ambition. So it's really exciting.
Saudi Arabia's Vision 2030 is a comprehensive plan launched on April 25, 2016, aimed at reducing the nation's dependency on oil and diversifying its economy. Centered around three main themes, the framework outlines specific objectives to be achieved by 2030, including the development of ports, cultural assets, and tourism destinations to leverage Saudi Arabia's strategic position at the crossroads of the Arab and Islamic worlds. A key element of the plan involves partially privatizing the national oil company, Aramco, and enhancing the resources and influence of the Saudi Public Investment Fund. For decades, Saudi Arabia's economic growth has been driven by oil, but this reliance has exposed the nation to the volatility of global crude prices. In the 1990s, while oil prices remained stagnant, government policies encouraging larger families led to a population boom. This growth, combined with a young, highly educated workforce, resulted in rising underemployment and unemployment rates, particularly among the youth. Vision 2030 seeks to address these challenges by transforming Saudi Arabia's economy over 15 years. The plan aims to improve the quality of life for citizens through world-class healthcare and education, equipping young people with the skills needed for future jobs. It also focuses on creating a diversified economy, emphasizing trade, tourism, high-tech industries, and a business-friendly environment to attract foreign direct investment and entrepreneurs. Key areas of diversification include cryptocurrency, artificial intelligence, and environmental sustainability. In a significant milestone, Saudi Arabia's non-oil sector contributed 50% of the GDP for the first time last year, signaling the success of the ongoing economic transformation. With Vision 2030, the kingdom plans to inject $3 trillion in foreign investment into its economy, driving further growth and offering new opportunities for multinational companies. As the nation continues its economic revolution, it is well positioned for a promising future. The Kingdom of Saudi Arabia is confronted with various obstacles and weaknesses, chiefly arising from the vagaries of international markets and oil prices. The country urgently has to diversify its economy and lessen its reliance on oil revenue. As this instability in the economy highlights, the country also needs to deal with environmental issues and the global shift to renewable energy sources, which puts further strain on its established economic structure. Given that oil exports account for a sizable amount of Saudi Arabia's national income, the country's economy is greatly impacted by the volatility of oil prices. It is challenging for the nation to keep a solid economic outlook due to the unpredictability of the world oil market. As a result, the kingdom has been actively pursuing measures for economic diversification through its Vision 2030 project, with the goal of fostering the growth of non-oil industries, including technology, entertainment, and tourism. The world's need for oil is predicted to decrease as it moves toward renewable and sustainable energy sources. The adoption of greener technologies and investments in renewable energy projects are imperative in light of this worldwide trend. Saudi Arabia, seeing the need to change with the energy environment, has begun to investigate and invest in solar and wind energy. The main issues facing Saudi Arabia are its dependency on oil for its economy, the instability of the market, and the necessity of embracing environmental sustainability. For the country to have long-term economic stability and growth, these problems must be resolved. After a year of minimal growth in 2023, the Saudi economy is expected to start recovering in 2024, though its success will largely hinge on the government's oil production policies. The economic downturn in 2023 was exacerbated by the monarchy's unilateral decision to cut oil output by 1 million barrels per day from July 2023 through the end of the year to support oil prices. This move led to a self-inflicted economic slump. However, with an anticipated increase in oil production and exports, along with continued expansion in the non-oil sector, real GDP growth is projected to rise by approximately 2% in the latter half of 2024. Aligning with historical averages since 2014. A significant budget deficit is likely to persist, potentially dampening energy and construction projects, particularly with the resurgence of regional conflicts. Despite these challenges, Saudi Arabia is expected to continue investing heavily in large-scale projects. Saudi Arabia's reliance on agri-food imports, particularly grain, remains substantial, but the kingdom has managed to find alternatives due to its purchasing power. Inflation is projected to remain around 2%, supported by substantial export earnings, significant reserves that maintain the currency peg with the US dollar, and a rigorous monetary tightening cycle that began in March 2022, alongside the US Federal Reserve. Oil prices will continue to be a key driver of the economy, providing essential funding for Vision 2030's long-term objectives. Decisions made by OPEC and its partners, including Russia, Kazakhstan, Azerbaijan, Mexico, and Oman, OPEC+, have struggled to maintain crude oil prices above $80 per barrel, a level deemed necessary for most OPEC+ countries to balance their trade and fiscal needs. Attempts to increase production limits have been hindered by renewed geopolitical tensions in the Middle East, benefiting countries not constrained by output limits. In 2022, Saudi Arabia's economy grew faster than any other G20 nation, with overall growth reaching 8.7% and non-oil GDP expanding by 4.8%. The non-oil sector saw its most robust growth since third quarter of 2021, increasing by 6.2% in fourth quarter of 2022. For 2023, the non-oil sector is expected to grow by 4.7%. Driven primarily by strong private consumption and significant private sector investments, particularly in construction, retail, wholesale, and transportation. This shift highlights the growing role of the private sector in Saudi Arabia's evolving economy. Vision 2030 aims to increase the non-oil GDP share to 50% by 2030 and diversify non-oil exports. Key sectors for focus include finance, insurance, transportation, communication, non-oil manufacturing, and agriculture. In 2023, non-oil revenues surged by 9%, while oil revenues fell by 3% due to declining crude prices. To reduce reliance on oil, the Saudi government has implemented significant budgetary reforms, including revenue enhancement, spending rationalization, treasury single account implementation, energy price reforms, fiscal risk assessments, improved budget transparency, and strengthened debt management. The non-oil sector is seen as a crucial component for managing the increasing number of Saudi nationals entering the labor market each year. It offers greater stability, sustainability, and job creation compared to the volatile oil sector. The stability of the region and worldwide alliances are greatly impacted by Saudi Arabia's strategic position in the world oil markets. Being one of the world's top oil producers, the kingdom has significant influence over the availability and cost of energy worldwide. Saudi Arabia is able to shape alliances and regional dynamics thanks to its advantageous geopolitical position. The potential of the kingdom to influence or destabilize the oil markets can have significant ramifications for countries that import and export petroleum products. Global markets closely follow Saudi Arabia's decisions about the amount of oil produced, as these decisions have the potential to affect global economic conditions. Its position in the Organization of the Petroleum Exporting Countries, OPEC, where it frequently takes the lead in coordinating member states' production policies, is another example of this power. Saudi Arabia's energy policy and geopolitical ambitions are closely related on a regional level. Part of the reason for its partnerships with major world powers, especially the US, is shared energy interests. Additionally, the kingdom can support or oppose different regional actors due to its money and influence, which has an impact on regional stability. Saudi Arabia's oil interests and the need to preserve its dominant position in the region play a major role in its engagement in crises and diplomatic attempts throughout the Middle East, particularly its attitude on Iran. When one considers Saudi Arabia's transition from an oil-dependent economy to one that is more diverse, one can see that the kingdom is at a turning point. Although there is uncertainty about the future during this shift, it emphasizes how important it is to be resilient and adaptable. By adopting strategic planning, encouraging innovation, and making a commitment to sustainable development, Saudi Arabia is managing this transition. Even though there are still obstacles to overcome, the kingdom's initiatives to lessen its reliance on oil earnings and investigate new business opportunities represent a substantial step in the direction of a more diverse and sustainable future. In conclusion, Saudi Arabia's long-term economic growth and stability will depend greatly on its capacity to adjust to these changes. Although the road ahead is difficult, the kingdom's proactive strategy presents a viable way forward. Thank you for tuning in to our channel. If you enjoyed the video, please remember to like, share it with your friends, and subscribe to our channel for more in-depth analysis of global issues.